everybody, welcome to my YouTube channel. I am the Chartist, and I wanted to do some technical analysis on the SPY, QQQ, ARKK, and Bitcoin. Alright, had a really red day, had a really red week. Now, if you watch my previous video, I talked about how SPY had this inside day candle setup right here. So this is a daily chart of SPY. Okay, I'm gonna move the moving averages. I'll bring that up back later. This was the inside candle right here. So an inside candle is on the daily chart. Inside day candle is when it's trading within the range of the previous day candle. Okay, that includes the high and the low, and this candle was in that range. So this is the child candle, and this is the mother candle. And I mentioned to you guys to definitely look up how to trade an inside day candle if you wanted more information after watching my video, but I did explain a little bit. So the way we would trade an inside candle is if we watch for the break of the mother day candle of the range. Okay, so remember I said, so the low for this mother candle right here was 443.44. I said to you guys, if I see it break, I will be betting to the downside. Okay, and sure enough, that same day, after it broke the mother candle, it went even lower all the way down to the 440s. Okay, now am I bullish? Am I bearish right now? I believe there's more downside. Okay, we had this breakdown right here. First of all, this one was when it bounced off support, was really good. Got me thinking of bullish price action. Then the next day, it broke and closed just below bearish price action. Next day, it faked us all out with a bear trap, went right back up, giving us this big green candle. Then the next day, it was very choppy, giving us an inside day candle. Okay, so not an easy week to trade, especially if you're a bull, but it wasn't easy for the bears neither, because the market makers were getting choppy with us, faking us out, getting us to second guess ourselves, right? But it gave us this nice setup, and if you guys traded with me based on the inside day candle, you guys should have made some money. Okay, but even then, it's still challenging, right? Because there's no guarantee. That's why we have to manage risk 100%. No strategy is 100%. Not even the inside day candle trade setup. But in this case, it worked out well, and I believe we'll have more downside, and we could come down to these few support levels that I'm looking at. Okay, we have this one right here, this white line right there. Don't look at the red. That red area is the area of liquidity, but the red line, the white line, that is the support line. Now the red area is the area of liquidity where stop losses are getting built up. Retail traders stop losses. Okay, so they look at this trend, they see a stop, they see a bounce there, so they're gonna watch the support line and they're gonna expect a bounce again. All right, and that's most likely where a lot of retail traders will look to go long, to enter around 439 level. Okay, so that means the red area is area of liquidity potential, where stop losses are getting built up and the market makers could potentially look to take it out. Not guaranteed, because they like to set up the ranges first of where the support and resistance levels are. Before they really use it, they need a lot of people to see it, to see the support and resistance. A lot of people to see it, and a lot of people to react to it, and then they will fake us out, okay? So that's potential 439, and then the AOL will be around 438, okay? So 438 is the range, all right? We also have this triple bottom right here, 1, 2, 3, and that's at the 436 level, okay? So 438 to 436. That's a good range that I want you guys to watch out for this week to look to buy. Under 436, if it drop under, and I mean a close under 436, there could be more downside. I'll be very careful, all right? It has to be closed because it could be the area of liquidity there as well, okay? Always keep in mind the AOL. All right, we had 3 bounces already. So be careful on that 4th bounce. All right, that 4th bounce could be the one where they take us out. So just keep that in mind. All right. If you're gonna go long and you're looking for buying opportunities, always do your best to buy around the support area or the AOL area. Okay? So 438 to the 433 range. Keep an eye on that range if we get down to that level. Okay? But there is a support at 439 and there is a support at 436. Alright? The red area and the blue area are the areas of liquidity. Please look that up. Look up about how market makers go stop loss hunting, how they fake us out. Look up about that stuff, okay? It's not enough to know technical analysis. You have to think about the psychology behind it as well. The mindset of trading and technical analysis is important because these patterns, they tell a story. All right, now price action is important, but they also tell a psychological story. All right, and it takes practice. It takes years of practice. I've been trading for 4 years. And I'm still trying to get better at it, okay? So it's impossible not to get better at something when you put in so much time in it, okay? So I definitely encourage you to look up those things, all right? So I don't want to ramble too much. Basically what I'm saying is 439, 436 are buying opportunities, okay? It could be more downside for the SPY. Now I'm looking at the VIX that inverses the SPY. Now, if you look it up, 75 to 78% of the time, the VIX inverses the SPY. So SPY is going up, VIX is going down. Looking at VIX right now, with these bullish bounces, the fact that it's trading above the 200-day moving average again. Now, if you look here, where the blue line is, go to a smaller time frame, you can see that it was bull flagging. Perfect bull flag. And it bounced right off the critical support levels where the 50 and the 200-day was. This is a golden cross on the VIX from the 4-hour chart. Bullish price action on the 4-hour chart, guys. Alright, now I'm watching, will we get this double top? Alright, that's something I'm watching for. On a double top area, right here. And if it goes back down, back below the 200-day moving average, which is at $20. So VIX get back below the 20, would be very good sign that the SPY will head back up and at least give us a relief rally back to 448. You guys see where I'm talking about? Okay. There's also a chance VIX go and test this resistance line right there. The resistance line up there at $23. Okay. Because here it is. Make it smaller. Okay. Touch there, had a touch there. So this white resistance line has been respected. So, and this look like there's more room for VIX to go up. So if VIX goes up, like I say again, SPY will go down. And it may come down to one of our support levels, 439 to the 436 range. Okay, guys? So, unfortunately, today, for this week, I am kind of bearish unless I see something different. Now, what do I need to see to get bullish again? I want to see... Well, the 50-day moving average is right down there at the 442.72. So I like to see SPY get back above 442.72 and close above that. What will really give me a good sign if SPY can get back above the 5-day moving average, because in a strong bear market or a bear trend, we get a lot of bounces, or rejections off the 5-day moving average. Okay, like in a strong bull market, we get lots of bounces off the 5-day moving average, heading up higher, more often than not. But when it goes down, we get rejections from the 5-day moving average, more often than not. As you can see, it's happening right there, and it happened right there. Okay, so 5-day movement is at 445.44. If SPY can get back above 445.44, that's a good sign that we are reversing. Okay, and it has to close above 445.44. Okay, but if it doesn't get back above 442.72, which is where the 50-day moving average is, if it fails to get back above that, or it gets rejected at that level, it's a good sign we're gonna head down. All right, so that's what I'm watching for this week. All right, hope you guys caught that or understand what I'm saying. All right, very important week for the SPY. Now I'm moving on to the triple Q. This is a weekly chart of the triple Q macro level, and it broke the 5-week moving average, which was at 375.15. Okay, now this on the based on the weekly chart of triple Q, it still looks bullish. Okay, but we are seeing that it could come to more downside. Now the next support is at 367.9. This is a weekly chart. All right, and below that is 355.66. All right, those are critical levels for the triple Q. Definitely keep an eye out on that. Now go back to the daily chart. I still have it trading within this channel right here. Okay, it's trading below the 20-day moving average. Chart starting to look very bearish. Got this big Clifford candle. Okay, the 50-day moving average all the way down here at 369.63. And when you have the support, we also have the support at 367. All right, definitely watching. These are the daily chart. Okay, not as not as macro leveled as the weekly chart, but definitely watch out for that level. 369, 367. That's the levels or the range that I will look to enter for the triple Q. If it drops below 367, and I mean close below 367, not drop below this low and come back up, but close below it, I will be cutting my loss. All right. So technically speaking, this is still a bull market for triple Q. I mean, short-term price action is not looking good. I do believe there's more downside. So if you're a bear, do your thing. But I'm a bull in a bull market. I look for buying opportunities off of one of my strong support levels, and of course, I manage risk because I could be wrong. All right, guys. So one more time, the 369 to the 367 range, I will be looking for buying opportunities there. Is it guaranteed triple Q will head down that low? Probably not. It's not guaranteed, of course not. But I hope it does, for bears to make money and for me to get a nice entry in and ride it back to the upside, which I believe we could get back up to 387. Okay, now if it doesn't drop down that low and triple Q starts getting back above 377, or where the 13-day moving average at 378.71. So basically, triple Q at 379 or above is very bullish, and it could be more upside. Okay, this could have been the downside. Okay, so we want to see if triple Q can get back above all the moving averages, which is 378.71, or if it'll come back down and bounce off one of our support levels. That's what I'll be watching this week. All right, moving on to ARKK. ARKK faking us out again. You gotta love how these market makers work. Right? Very tough, very tough. So we got this. Looks like an ABC move to the downside. It gave us this false breakout right here. We're coming down, and it even tested it, rejected it, looking like it was gonna give us more downside. And look what happened the next 3 days. The last 3 days, it started moving back up, and now ARKK is trading back above the 13-day. 50-day, 20-day, and even the 5-day moving average. So we're seeing bullish momentum building. This right here could be a higher low. Okay, so this could be the start of a new impulsive move. Okay, wave 1. This could be wave 2, and we could be entering wave 3. Will we finally hit my price target of 132 and then 142 after that? We will see. I've been talking about it for weeks now, and we haven't hit it. Okay, so we'll see. All right, this area right here, you see this setting triangle. This area right here is false breakout territory. Sometimes they like to fake us out after they fake us out. You gotta love that. So let's remember that for the future, guys. Market makers like to fake us out after they faked us out. All right. So from what it looks like, I am bullish on ARKK. I think the next price target will be 124, then 132, then 142. Definitely keep an eye on that. Okay. Now, moving on to Bitcoin. I got Bitcoin, like I said before, and Wyckoff's accumulation still. Okay, these are the labels. All right, and the moving averages. All right, so we knew that, I mentioned that Bitcoin's in phase D, and we knew that it would get choppy around these levels, okay? It's gonna get choppy. Look here, phase D, right here, phase D. See, it'll get choppy. And then we'll head into phase E for the big explosion to the upside. So that's what I'm watching for, guys. This is the time when you're hearing bad news. I don't really pay attention to the news too much, only if I need to. I mostly, keep my eyes on the price action and the technical analysis. Okay? But I'm pretty sure you guys probably hearing some bad news about Bitcoin probably, and why it's bad or why we shouldn't buy it, and I don't know. But don't let the FUD get to you. All right, we're here to make money so we can have a better future or even a better present. Okay. So this is phase D. It's supposed to be choppy, which it is. I believe this is the time to buy. So that get ready for that big move heading into the phase E phase. Okay, so let's make some money. Don't be afraid to buy a support, as I always say. Okay, is it 100%? Absolutely not. Always manage your risk. But Bitcoin is looking good to me. It got us in phase D. Phase E coming up soon. Elliott wave, I got us finishing up wave 4. We head into the 5th wave to the upside. All right, I have a 59K price target. All right, so that's what I got for today. You know, hopefully this coming out week, if you didn't do too good last week, I hope you do better this week. If you did good last week, I hope you do just as good or even better this week. All right, so thank you guys for listening to me. Thank you for watching my video. Thank you for, I hope you guys find value in this. And I'll see you guys tomorrow in the next video. See you soon.